What's happening, YouTube? It's your boy JD Trades, and I'm back again with another pre-market analysis open video. Well, even though the market is already open, we had a little bit of a busy schedule last night, but nonetheless, let's get straight into it. As always, guys, don't forget to leave a like, comment, and subscribe, turn on that post notification to get notified whenever I post a new video. And without further ado, let's take a look at the charts. As you know, every single week we're always going to start things off with the DXY and take a look at what's happened last month. Now last month, we cleared out very key significant highs. Okay, so the liquidity resting above those highs have been grabbed, and a reaction in the opposite end is necessary. Okay, it's expected. Now as you can see, we've already kind of contracted off of taking those highs there for the DXY, and when we take a look at the weekly perspective, we're working ourselves inside this weekly imbalance at the very moment. Okay, on the daily time frame, I want to see us actually drop a little bit lower, okay, to this daily area here, and see if we can actually get some accumulations to continue the push to the upside. Okay, that's where I'm going to anticipate price heading to the most. At the moment, when we look at market structure, okay, we've got the high low, high. We've actually broken this high low here, so at least for the short term, I wouldn't be surprised if we get a bit of a strong dollar to begin the week, and then we end the week by pushing a little bit lower. We may close a doji back into the range, we never know, but this is what I'm anticipating for this week's target on the dollar, so keep an eye out on this setup. We're looking to finish 2024 strong. Last month, inside of the premium VIP, we had an 8% growth. Okay, this month we're trying to beat that. Let's go for 25, let's go for 30% growth. So we'll see. I mean, December is usually more of a quiet month, and I might just decide to take a break for 2 weeks, but let's just see how it goes so far. But yeah, so far that's what I'm looking at for the DXY. The picture is not really the best, right? We've had a lot of gap openings, gap closures, all over the place. The candle and the price action is not the best at the moment, but what we can use during these market conditions is structure. Okay, understanding what price is the most likely to do when looking at structure. Okay, are we bullish, are we bearish? Like, what is the current the current strength of the dollar? Do we look likely to head up higher or head down lower? Okay, so that'll be that for the dollar, but also understand that we are already in a pretty decent area already to actually continue pushing up on the weekly. But we're going to understand what the daily picture is telling us, and understand that there's still potential with a nice point of interest on a lot lower where prices can actually head down to. Okay, let's take a look at quickly at the economic calendar. So we have a lot of high impact news this week. We've got manufacturing PMI, ISM manufacturing PMI for the dollar and the pound today. Tuesday we've got JOLTS openings for the dollar. We've got Governor Bailey speaking with services composite PMI for both the dollar and the pound, with ADP non-farm employment, crude oil inventory, and Mr. Jerome Powell speaking. As you guys know, it is a new month, so it's always going to be hectic. There's the NFP, the Fed is going to be speaking. Thursday we've got construction PMI for the pound, early doors, and then we've got initial jobless claims for the dollar on Thursday. Friday there's a small, well, it's not small, but there is Independence Day for Finland. I'm not too sure who's trading their currency, but just bear that in mind. However, we do have Halifax house price index for the pound on Friday with average hourly earnings, NFP, and of course unemployment rate. Okay, it's absolutely packed this week, right? It's so packed this week. It's going to be a very hectic week, so guys, take it easy. I mean it, take it easy. All right, let's take a look at some of these other pairs and see if we can get any sort of setups. At the moment, there's literally none. I have no setups. I've looked at the likes of gold, I've looked at the likes of Euro USD, trying to show you guys if there is a potential setup available for them, but again, there really isn't anything that's prime. Okay, now the interesting thing about Euro USD is when we compare it to the dollar, of course we saw that the dollar has actually broken structure, but EU is still holding its bearish stance for the time being. So we need to see how the dollar is actually going to affect Euro USD, because right now we are in an okay area where price can continue pushing up higher. However, we're also in a decent area for price to, of course, push down lower. When we look at the structure on the daily perspective and we get out a fib tool, okay, you can see that we've come to pretty much the extremes are around 88%, and that's where we had the closure of that candle. So a stretch lower wouldn't be all that surprising. Okay, AU's price action very, very ugly. You know, a lot of wicks on both ends. You know, the high, the low. Price is a little bit indecisive right now, and you know, I understand myself and my strategy, and understand that these are not market conditions that are suitable to myself, so I would just rather stay out of it. But you can see here we've had a pretty decent play into this hourly candle. AU is currently dropping lower, but we'll take a look at that later. Last but not least is going to be on gold. So gold is actually really interesting in terms of what it's done. Okay, let's just go through the overview. Okay, on the weekly time frame, we've had a very nice pullback into discounted prices. Okay, and from that discounted price, we've now seen, you know, markets actually push up, right? The week prior, I did say to you we've had an incredibly strong week, so I want to see us actually pull back down on this incredibly strong week and see a continuation. Do I still believe gold can head up higher? Yes. You know, I think for the end of this year we are probably going to get very close. Okay, we might touch 3k, but we might get very, very close. Maybe early Q1 next year we might get, you know, 3k gold. But I do think 3k is a very nice whole psychological number that price can definitely gravitate towards. So you know, we'll have to of course look at all the other geopolitical factors and see whether the market is risk on or risk off in order to understand where is the best, you know, direction for gold to head to. But at the moment, if we are going to look at the current price action that we've had, okay, we've had a play into this 4-hour candle and we've rejected to the downside. Okay, now realistically we need price to actually take out this low and then give us a pullback to then go short and see if gold wants to actually head down lower. But for the time being, there is nothing concrete as of yet. You can definitely trade the volume of gold's price action at the moment. There's nothing wrong with that, you know. I don't have anything against that, but for now, in terms of something that's going to give us a little bit more concrete evidence, a little bit more decisive price action to let us know like, hey, this is a pretty decent chance. Okay, now the only setup that I'll leave you guys with is to anticipate this 2-hour candle potentially giving us a move lower, to see if this overall bearish structure wants to hold. Because realistically, since we broke this high low here, high, we dropped down, we had a slight pullback, we dropped down. So from this high point to this low point, price is allowed to, you know, wick. Let me see if I can mark out this fib, see if you guys can identify it. Okay, price can wick the 62% push down. Even if it doesn't make a new lower low, it can also push back up higher and retest the range at a much higher premium price, right? Because remember, when you are selling, you want to actually sell at a premium, not at a discount. Okay, so now we've pushed up into 71%, 78% fib retracement. So look, we may get one more test and then see prices drop lower. But again, there's so many other factors that will affect gold, and especially in such a economic high impact driven week, it's going to be a little bit difficult to ascertain just off of looking at the naked charts alone, and just off of understanding that, hey, you know, the current closure of last week is going to be sufficient evidence for me to say, hey, you know, this week is most likely to do this. This is one of those weeks where there isn't enough evidence for you to accurately ascertain where price is most likely to go to next. Okay, we have to play by the ear and see how price accumulates throughout and prints throughout the rest of this week. So we have a lot of live streams this week, so if you guys haven't already subscribed and turn on your bell notification so that you're notified whenever I post or go live, you need to click that button. And also, if you enjoy this content, more of this content is provided for free inside of my public Telegram channels. Link to the public Telegram channels is in the description box down below. All you got to do is click the link and it'll take you there. And whilst you're there, drop a like on the video. And as always, guys, always remember theory behind the practice, and I'll see you guys soon. Peace.